What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the green day that finally, at last, we had today in the markets. And today we had finally, at last, justice was delivered. We were needing a green day across the board, and we got a green day today across the board. The Russell 2000 goes up today 1.40%. The Nasdaq goes up 2.92%. Dow Jones goes up 1.82%, and the S&P 500 went up today 2.14%. Crude oil got absolutely crushed today, going down 7.65%, and both the WTI and the Brent closed today's trading session below $100. Do you guys remember JP Morgan and Goldman Sachs saying last week that oil was heading up to $160, $180, or $200 per barrel? Well, so far it looks like they are mistaken. Gold goes down today 2.28%. By the way, guys, AMC Entertainment purchased today 20% of stake in a gold mining company. So what the fuck, bro? Why is AMC buying a very decent stake in a gold mining company with gold being at all-time high? Absolutely unbelievable. And as I just said, silver went down today 0.94%. The VIX went down today 6%, but it closed above 30 points. 30 points is such a critical support for the VIX. The VIX hasn't closed any trading session below 30 points, guys, since February 28th. What a critical support for the VIX. That's an important task that the bulls have ahead of themselves. And the 10-year Treasury yield went up today almost 1%. So what happened? Why all of a sudden today we had a green day in the markets? Well, first of all, we didn't have any unexpected bad news coming out from Ukraine. And we got good news inflation-wise, even though I know that inflation is still running hot. But today we got the producer price index of February, which came out better than expected, guys, reflecting an increase month over month of 0.8% versus 0.9% expected. So that's good news. And if we take a deeper look at that report, we find even better news. And why? Well, because the core PPI, or the core of this report, the producer price index, came out, that core PPI excludes food and energy, it came out even lower, reflecting an increase month over month of 0.6%. And if we take into account that the CPI data report of February came out as expected last week, and if we also take into account that the jobs report of February didn't show any wage inflation, so the markets are assuming, and that's the main reason why we had a green day today, that the interest rate hike that is going to be announced tomorrow by the Fed is going to be of 0.25%, which is for the most part what the markets are waiting for. So we got good news. I know inflation is still running hot. I am not arguing that, but we got good news inflation-wise because it looks like maybe the worst is behind us. And that's the reason why we had a green day today. Keep in mind that tomorrow at 1 p.m. Eastern Standard Time, we are going to have the Federal Reserve decision about the interest rate. I hope for the Fed to hike interest rates at 0.25%. And then at 2 p.m., Mr. Jerome Powell is going to be holding a press conference, and that obviously is going to be a mover of the markets tomorrow. If we take a look at the sectors, today the most expensive sectors of the markets were the ones that outperformed. So tech went up today 3.36%, and consumer discretionary, shout out to Amazon and Tesla, went up today 3.35%, the worst performing sector by a long shot. Energy, which went down today 3.66%, and the financial sector, another very important sector of the markets, goes up today 1.41%. Keep in mind, guys, And obviously, as of now, we have a very special situation on the table because of the war in Ukraine. But usually, and this is something that I have told you guys left and right here on the channel, during Fed rate hike cycles, the markets, from a historical standpoint, go up, have a positive performance. And on those occasions, the best performing sector, once a new cycle of interest rate hikes begins, is the tech sector. So this is a puzzle piece that we have on the table as of now, because is this a coincidence that the tech sector was the best performing sector today, one day before the Fed begins a new cycle of interest rate hikes? Who knows? But if that were the case, then tomorrow we are very likely, according to my opinion, to see a continuation of the rally that we saw today, unless something unexpected happens in Ukraine. I don't know, maybe Russia invades or attacks Poland or any other European country. But if anything unexpected happens, I think that we are very likely, the odds are in favor of the bulls in order to have another green day tomorrow. If we check on the advances and declines distribution, we can confirm that we had a very broad rally today with 4,661 stocks going up and 2,872 stocks going down. Now I want to show you quickly two trades, the only two trades that I closed in today's trading session. The first one, JP Morgan. This was a call option that I purchased yesterday, the $130 call that expires on September 16. I paid yesterday $1,190, and I closed this trade today selling out of this call, and I was paid $1,300. I ended up making over here $110, and I also played a bounce trade, guys, a bounce back up trade on the S&P 500 with SPXL. This was a call option that I purchased yesterday, thinking that today we were going to have a turnaround Tuesday, and that was the case. So yesterday I purchased the $95 call that expires on July 15, and I paid $1,630, and I sold out of this call option today, and I was paid $1,780. I ended up making over here $152. So with these two trades, I ended up making today $260. Now let's go ahead and take a look at the S&P 500, which as I said in the introduction of this video, goes up today 2.14%, and it closed today's trading session at 4,262 points. Okay, if you guys remember, what did I say in yesterday's video? The bears have unfinished business at 4,160 points. They haven't been able at all of closing any trading session throughout this corrective phase below 4,160 points, and today wasn't the exception to the rule. So in the case of the bears, clearly, guys, the most important task that they need to carry out in the upcoming trading sessions is finally maybe being able, I hope not, but maybe being able to close any trading session below 4,160 points. And in the case of the bulls, guys, the most immediate task that they need to carry out is going to be taking on this 50 SMA on the 4-hour chart at 4,300. 4,300 also happens to be a previous area of support back from early October. If we take a look at the RSI of the S&P 500, 50 points, that implies that this index is neither oversold nor overbought. So it could go either way, but I believe, guys, that if the Fed happens to announce what the markets are waiting for, an increase of 0.25%, we are very likely to see a continuation of this rally. And mind you, guys, as of now, we have a lot of technical traders and market analysts talking about a death cross in the S&P 500 because the 50-day moving average crossed below the 200-day moving average. That is obviously a bearish sign. So if that death cross happens to affect the S&P 500 in a very negative way, then we can make the case that finally the bears are going to be able to take on 4,160 and close a trading session below that level. That is something that we will find out in the upcoming days. Nasdaq 100 goes up today 3.16%, and check this out, guys. The NDX closed today's trading session at 13,458 points. And if you guys remember, what did I say in yesterday's video? The most important task for the bulls over here, despite the fact that this is a very ugly looking chart, is going to be reconquering, taking on 13,400 points, a previous area of support back from March 10th. And that's exactly what the bulls did. So from a bullish perspective, the next task for the bulls is going to be taking on the 50 SMA on the 4-hour chart at 13,700 points, which also happens to be a previous area of support back from January 21st. And in the case of the bears, guys, they also have a very tough one over here, guys. They need to close any trading session below 13,000 points, which is a previous area of support back from February 23rd. The RSI of the NDX, 47 points. So the NDX is pretty much in the same situation relative to the S&P 500 when it comes to the RSI. These indices are neither oversold nor overbought. They could go either way. But I believe that if the Federal Reserve doesn't happen to pull the rug tomorrow, we are going to see a continuation of the rally on the NDX as well. Fedex is going to be the very first stock of this video, which goes up today 2.42%, and it closed today's trading session at $216.23. And guys, in the case of Fedex, we are not talking about workers, we are not talking about, any other tech stock, a Snowflake or Upstart or Affirm. We are talking about Fedex, a very classic company of the American economy. And Fedex, as of now, and because of the corrective phase that we are having as of now in the markets, is 30% of the highs, guys. And mind you, Fedex reports earnings on Thursday. So that is going to be a very interesting earnings report to take a look at. I wonder what is the management of Fedex going to say when it comes to inflation, supply chains issues, and so forth. So $217, and when it comes to taking a short-term trade on Fedex, $217 is an area of interest, guys. $217 is a previous area of support back from early October. And as of now, the bulls of Fedex are holding the 50 SMA as lower support. So this is a good sign. So if I happen to see tomorrow, guys, Fedex starting to consolidate slightly above $217, that might be a sign in order to start a trade over here. Because if that were the case, I think that the bulls of Fedex have a fair chance of filling the next gap up to $228. $228 happens to be a previous area of support back from early December. So if I were able to take this trade from $218-ish up to $228, we are looking at a 5% profit. The RSI of Fedex at the 4-hour chart is at 53 points, very healthy from a technical standpoint. So I think that we are very likely to see $228 in the case of Fedex sooner rather than later. The second stock of this video is going to be Salesforce CRM, which goes up today 1.56%, and it closed today's trading session at $196.14. And in the case of CRM, keep in mind, I already told you that during Fed rate hike cycles, the best performing sector usually, or from a historical standpoint, happens to be the tech sector. And this is a tech company, this is a cash flow positive company, this is a profitable company, and as of now, we find CRM, guys, trading 37, almost 40% of the highs. So this is a very decent dip, guys. I wanted to say over here, guys. Obviously, this is not a good looking chart, clear downtrend. As of now, CRM is trading below the moving averages. But I think, guys, that if we happen to see consolidation in the case of CRM, slightly above $192, a previous area of support back from March 8th, this could be signaling that the bulls are gathering momentum in order to make another push higher, or a push higher that they haven't made in quite a long time, because this stock has been downtrending like crazy. But I think that maybe the bulls of CRM have a first shot of filling the next gap up to $205. We are talking about a former area of resistance back from early March. So if we can take a trade in the case of Salesforce from $194 up to $205-ish, we are talking about a 6% profit trade. RSI 46 points, very healthy from a technical standpoint. So I think that if tomorrow the tech sector happens to have a good day, watch out for Salesforce paying a visit up to $205. The third stock of this video is going to be a Snowflake. And let's talk about horrible chart, guys. Snowflake goes up today 2.42%, and it closed today's trading session at $170.78. So, as of now, guys, Snowflake is trading 60% of the highs. Obviously, you guys know that most software stocks have been killed recently in the markets because of the corrective process that we are seeing as of now. This is a very ugly looking chart. Snowflake is trading below all the moving averages. So I think that the stock of this company might be a think about if the bulls of snow, guys, can show some signs of life. And what would be that situation looking like? Well, if the bulls of snow can take on $185, we are talking about a former area of support that acted on 2 occasions in early March. I think that they might be able to fill the next gap up to $213, a previous area of resistance back from March 8th. So if we were able to take a momentum trade, a bounce back up play in the case of snow, with the stock of this company taking on $186, and if we can write up our shares up to $213, we are looking at a 13% profit. And the last stock of this video is going to be a stock that I am getting a lot of questions about, guys. Lucid Group. And in the case of Lucid Group, the stock of this company goes up today 2%, and it closed today's trading session at $21.98. And this is another very ugly looking chart, guys. This is a technical downtrend. Lucid is trading below all the moving averages. So this is a no touch. I actually got a lot of questions today like, hey, Alvaro, but $22, $21.50 is a previous area of support, and it is a previous area of support back from July of last year, and also back from late February. But guys, the stock of this company is a no touch below $25. $25 is a previous area of support back from mid-February, and it is also a previous area of resistance back from early August of last year. So this is a stock that I am going to be keeping a close watch on, because I think that if the bulls can take on $25, they could be potentially able to fill the next gap up to $28, which is a very critical area, a very critical technical area for the stock of this company. $28 is a previous area of resistance back from mid-September and also back from late July of last year. So if we were able to take a momentum trade, a trade with Lucid Group breaking out from $25, and mind you guys, and you guys know this is a very volatile stock that can make huge swings either up or down. So I think that the bulls take on $25, they can easily fill the next gap up to $28, guys. We are looking over here at a 12% profit. And with Lucid Group, I used to say Lucid Motors. No, it is Lucid Group. And with Lucid Group, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets over here in 2 different languages, English and Spanish. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday, 3 or 4 hours after the market closes. Peace out.